God's greetings, my accounting gurus. So today we are yielding Manna of Accounting, right? So we are doing corporate governance. I'm gonna just do a good summary on it. So corporate governance, right? Let me try to adjust my pen. Okay. Corporate governance. When we are talking about corporate governance, what do we mean? Governance. What do we mean by this? Please jot this down. Corporate governance refers to the way in which the directors ethical runs and manage the company. Refers to the way in which the directors ethically runs and manage the company. So you should know that directors are the one who runs and manage what? The company. So that's what we mean by corporate governance. You should know that this topic takes 15 to 20 marks of your paper one, which is always your last question, because we have 4 questions in accounting for paper one, which is your paper is rated over 150. So we have what we call a good corporate governance. It is important to create a positive organizational culture and minimizing the risk. It will contribute to the overall healthy sustainability and success of the organization. So this is the definition. We have the 7 characteristics of good corporate governance. We have what? 7 characteristics. Of good corporate governance. Now the focus is here. Number 1, we have social responsibility. How do we write it? Ability. Okay. Number 2, we have transparency. Number 3, we have accountability. Ability. Right. I hope you are writing my notes. Number 4, we have responsible management. Is it? Yes. Responsible management. Number 5, we have discipline. As a chartered accountant, you must comply with the 7 characteristics of good corporate governance. You must have discipline. Number 6, independence. You must know this by your head. Number 7, fairness. Don't be a crook. So, These are the 7 characteristics of good corporate governance. All right. You have to know the explanation of this, because it is possible that they might give you a table where they will say match column A with column B, right? So when we are talking about social responsibility, we mean that a company must act in a responsible way to the outside world, including the environment and wider community. So I'm not gonna dwell much on this. Go and do your homework. As for now, you have AI to make everything
So can
easier.
you please repeat what you said?
I don't want. So I'm sorry. You
I
know
said,
why? You know
please.
why? You know why, Chem? I want you guys, because if I
Why?
give you everything, you will just write these things and you will never go and study them. So if I give you a homework that
So
go
they are
and do
getting in our heads as you're
go
giving
and
us
do
right
your
now.
own homework, meaning that when you do your own research, next time in the class, you will know everything. So I'll be asking you a question, guys, unexpected. Mr. Mavest, what is transparency? So you should go and do your homeworks, guys. All right. Let me just repeat this one. A company must act in a responsible way to the outside world, meaning that they must include the environment and a wider community. This is what we mean by social responsibility. So those who are doing business studies, you will see this a lot, and it's a bonus for you, because you will never struggle with corporate governance. So guys, I forgot to tell you, I want a study guide, not a study guide, a flash book, which is for choir. You know for choir, right? So by the end of this week, it's too quiet for choir. By the end of this week, everyone must send me his or her stat guide in my inbox. Not stat guide, I'm sorry, the textbook, flash book. So at the back of your flash book, that's where you write my notes. In the front, you write my homeworks, activity. Thanks. So when we are talking about transparent, when I say, can you be transparent? You are not transparent. All right. This thing, it's not transparent, this one. Your handwriting is not transparent. So, in the world of accounting, we mean that business must be conducted without hiding agenda. So, don't hide anything, you must be clear. So, the business must not hide anything. So, that's why we say business must be conducted without hiding any agenda and secrets. When we are partners in a geolocally world, we must comply with the good corporate governance of transparent. Don't just go without telling me where are you going. You must be transparent. You must not keep secrets. So you must know, when you are talking about transparent in the world of accounting, businesses must be conducted without hiding agenda and secrets. There should be fully disclosure of all required and material information. Thanks. Then when we are talking about accountability, so when you are guilty of something, you know that your teachers will be saying, my learners, my metric learners, they didn't pass, they failed. I'm going for accountability. Meaning that they are going to account there why these learners are failing. Why? So now let's define this in the world of accounting. Employees, management, and directors must be held accountable for their decision and action, as well as the performance and that of the company. So, do you hear it? So, you must be held accountable for what? For your decisions and actions. So, this is like the consequences. So you know that if you don't study, you fail. So karma now is holding you accountable now. So I believe you understood. Then we go to the next one: responsible management. Responsible management. All right. So what do we mean? Directors must ensure ethical decision making, strategy oversight, and long-term sustainable in the interest of all the shareholders and compliance with the legal and regulatory framework. So, guys, it is very crucial. You can even go to AI and ask it to give you the best answers, the best explanation or definitions of this. So now I'm just trying to make it easier for you to understand. So when we go to discipline, when we say someone is lacking discipline, Mr. Maxwell is lacking discipline. Uh, Nhlanhla is lacking discipline. If, for example, Nhlanhla is a student, when I say Nhlanhla is lacking discipline, I might mean that it's not, I might be referring to the fact of he's not attending my classes, he's not writing my work. So let's go to the world of, I'm not saying Nhlanhla is doing that. Let's go to the world of accounting. Management must adhere to establishment policies or procedures and ethical standards to maintain an effective organizational structure. Meaning that if the management do all this, there will be discipline in a workplace. Right. So independency. When I ask you, are you taking or are you singing? It means that I'm asking about. So if you say I'm singing, it means that you are independent in the Jolican world. So let's go to the world of accounting and see what do they mean. When we are saying independence, management must act impartially and ensure fair and uninfluenced decision making. There should be no conflict or interest. I might be favoring Ntlantla. I might be favoring someone. Say, this one, wara 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 wara. So now let's go to the last one. Fairness. There must be fair treatment. If I give Mbali 50%, I should also give what Ntlantla 50%. That's what we mean by fairness. So I should not do favoritism there or nepotism. So that's what we mean by fairness, right? So, yeah. Then, is there any question before I proceed? Hello?
No, sir. No.
Are you satisfied?
No, sir. You can continue.
Are you satisfied? Okay, now we move. Let's talk about King Code. What is King Code? King. King Code. King Code. When we say king, what do we mean? Okay, the King Code refers to the refers to a series of governance codes in South Africa, providing guidelines and principle for effective corporate governance practice. For effective corporate governance practices, emphasizing transparency, accountability, and ethical behavior in the business. So you write that. So King Code is not a law, but South African companies are expected to apply all the principle of King Code to the organization. The JSE can delist a public company if King Code is not respected. So the most recent version of the King Code is the fourth edition and is referred to as King Code 4 or 5, right? So integrated report. King Code requires South African companies to draw an integrated reports, which also implies the triple bottom line. You'll be doing this, I think, term 3 for business studies. This means that a company must report on financial results such as profit, impact on environment, such as planet, impact on community, people. So you know that we have triple P when we are talking about the triple bottom line. You will see this in business studies. So the triple bottom line, when you see triple bottom line, triple uh, triple bottom, how do I write triple? Is double P or one P? Triple bottom line. Yes. So you should think of what triple P, meaning that the first P is for what? Profit. The second P is for planet. The third P is for people. So when you are talking about people, the impact on the economy, the impact of King Code, right, on the community, not economy, impact on community. How does this King Code impact the community? It can be positive impact, it can be a negative impact. So when you are talking about planet, impact on what? Environment. 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 Yes. So profit now, financial results. How the King Code contributes to the financial results. Are we making profit or a loss? So this is all about the integrated report, right? So now we go to the audit report. Now we are all about auditing. 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 Okay. So auditing committee. You must know when we are talking about auditing committee, we are talking about what? Let me change the color. All right, audit committee. All right. So audit committee is a group. It's a group. It's a group of experienced and skilled, of experienced and skilled directors that are appointed to oversee. So this one, they are prophets. They oversee. They look too much. Oversee the financial statements, the financial reporting process, the audit process. So please, I hope you are writing this down, my accounting goals. The audit process, the company's internal control system and regulation. So please write this. I'm giving you time to write this down. Then very, very soon we'll be done. My handwriting is beautiful, ne? Types of auditors. Number one, we have internal auditor. You guys, why you don't want to compliment my handwriting? Or you know that I'm lying? Number one,
No comment.
no comment. It's a handwriting of medical doctors, right? Or mine it's better. We have external auditor. So you should know that an external auditor, it is also known as an independent auditor. Independent. Yeah? So you guys, you'll correct the spelling there. So now let me draw a nice table, right, to tabulate this. Say internal auditor. Then I say external audit. So external, in it is inside, X it is outside. So inside what? The company. Outside what? The company. It means that the one who is inside is the internal, meaning that he's a permanent worker in the business. This one is just the temporal worker, the external one. Audit. So because the question might come, they ask you to differentiate between the internal auditor and the external auditor. So please do this, write this down, then we proceed. We say it's a permanent employee of a company, of the company. All right. Then the external or the independent, right, auditor. We are referring to a, let's say, let's make it easy, an external contract who works for a audit firm, right? An external contractor. So this one works on a contract. Say, Prof, can you come and audit for us? But I'm not working for you. I just work for a firm, right? Who works for an audit firm. Audit firm. Who works for an audit firm. Who works for an audit firm. So this one comes into the company for a period of time to complete the audit. He's not permanent. He is a temporary, right? So let's say comes into the company uh, for a period of time. For a period of time to complete audit. Audit. So now, this is the most crucial part. The internal one, we are going to say this one reports, because they will ask you where the internal auditors report to. They report to whom? So this one, they report to the directors. So the directors are the same as the management. So you should know that they report to the directors or management. Please keep that in mind. So that's when they will say differentiate between the internal auditor and the external auditor. You're going to say this. So the external auditor, they are appointed and reports to the shareholders, right? A shareholder is the owner of the business. So this one, they report to the shareholders. Appointed, they are hired. So the internal one, they are appointed by the company. So this one, they are appointed by and reports to the shareholders. I'll be asking you these questions, guys. All right. I think we are done. So we are done for this part. So now, the work that differentiate auditors to do. So, so you must know that I'm not going to write this down. Work done by an internal auditor, they work with all parts of the company and financial statement. So the main purpose is to identify risk and implement and improve internal controls. So let me just do it for you guys. The work that differentiate auditors to do. That that the different auditors. All right, auditors, auditors do. So when I say the work that the different auditors do, I mean the work that, because we have two auditors, right? So it's all about the internal audit and the external audit. What does the internal auditor do? What does the external auditor do? So now we are here on the internal auditor. What does an internal auditor do? So internal auditor. So if you become a chartered accountant, you can work as an internal auditor. So an internal auditor do what? They work with all parts of the company and financial statement. One, work with uh, work with all parts of the company. It means that they use everything in the company. And statements. Financial statements such as cash flow statement, statement of financial position, which is known as balance sheet. I told you I don't want to hear you saying balance sheet. Statement of comprehensive income, which is known as income statement. Number two, they identify risk and assess. Number three, they implement. They implement and improve internal controls. When we are talking about internal controls, I mean like the solutions or the security, to mitigate from risk, fraud, theft, yeah. Then the one that the work for the external. What does the external auditor do? Right. So automatically, you guys who want to be auditors, now you know, okay, if I become an internal auditor, I'll be doing this. The external auditor will be doing this. So they gather, we'll say, so we say they gather audit evidence. This one. They gather audit evidence. Number two, we can say they express an opinion. They express opinion on the reliability of financial statement to ensure is there no lies there, to check if there is fraud or what, maybe an internal auditor might lie, there might be bias. This one will come and say, no, you are lying, this report is an unqualified, it's a qualified. We are done. We know now the work that the different auditors do, right? We know the internal auditor work with all parts of the company and financial statements. They identify risk and assess. They implement and they implement internal controls. So the external auditor, we know they gather evidence, express opinions on the reliability of the financial statements, right? Yeah. So now let's go to a few points about external auditors. So just want you to hear me very well. Now we are talking about external auditor. So an external auditor must be a qualified chartered accountant. Do you hear me, guys? It must be a qualified chartered accountant registered with SICA. When I mean SICA, the first thing, the external auditor, I'm saying external auditors must be a qualified CASA. This is a designation, meaning that Chartered Accountant, South Africa. So they must be registered, again, registered with SICA. This is the professional body, South African Institute of Chartered Accountants. So an external auditor must remain independent and unbiased. They should not take any favors. This means that the auditor may not have any connection, friend, or family with an employee of the company and may not accept gifts or reward. If you are an external auditor, you are not expected to have a friend or family. So, what I'm saying is that an external auditor must remain independent and unbiased. This means that the auditor may not have any connection, meaning friends, family, with an employee of the company, you see, and may not accept gift or rewards. The moment you start to accept gifts, it's shy. It means that when they say, you remember I gave you a gift, so you must do this for me, erase this and write this, meaning that now you are committing fraud. So now, payment made to auditors is recorded as an expense called audit fees. So now let's talk about external, which is an independent auditor. The external auditor will gather information and evidence in order to form an opinion or the validity and reliability of the financial statement. The auditor will express this opinion in the audit report. Ne? So remember, we said they gather evidence. So now we got deep. External, known as what? Independent. Independent. Auditor's opinion. Opinion. All right. So there are three different types of audit opinion. Three different. Sombali, now I have arrived. Types of audit opinion. Opinions. Based on the auditor's opinion, right? These opinions are based on the auditor's opinion. On the auditor's opinion. Okay. So now, Prof, we are cooking. Now we are eating manna of accounting. Number one, we are cooking. Now we are eating manna of accounting. Dun, 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 dun. So you can see this one is happy. So this one is what? Remember, we have three different types of audit opinions based on the audit report. So this one is what we call the unqualified. So you should know this is a good and a clean report. Audit report. Right. So we have this one now. Can you see this one is sad. Very sad. This is what we call qualified. Okay, imagine Ntlantla calls me, say, Prof, there is a snake in my room and I saw it. Come and help me. Then I come, I observe, and I will say to Ntlantla, there is no snake in that room. Will Ntlantla be satisfied? No, he won't even sleep in that room because he saw a snake. But now issued a qualified audit report saying there is no snake while he saw the snake. So this is like they will be knowing that there is fraud, but someone will say there is a qualified audit report, meaning that this is a bias one. So this is disclaimer, right? It's also said very bad. It's a very bad one. So we say disclaimer. Another name known as withheld. Another name known as withheld opinion. All right. So this one, remember I said it's a clean, right? It's a clean report. And you will see it mostly by, they love to say, because they will ask you to identify the types of what of report. They give you a scenario, then you will state whether is it a good or is it a qualified or unqualified. So this one you will see it by this. Please write everything that I'm giving you fairly presented. Whenever you see fairly presented, I just know that this is what a clean report, and a clean report is known as what? Unqualified audit report. So, Miss Mbali, I hope I answered you. So, Prof, what do you mean when you say this? So, it means that financial statements are presented fairly in all material respect and comply with accounting standards such as GAAP. So this is what I can tell you. So this is the best opinion. This is the best audit opinion. It means that the auditor cannot find fault with the financial statement. audit report will contain the ways the financial statement present fairly in all material aspects. So now we move to the qualified audit report. So this one, you will see it by incomplete. Whenever you see incomplete, so this means that the auditor has identified a concern related to a fair presentation. So this one, you will see it by there is what there is you should know the auditor cannot express an opinion, positive or negative, because they could not obtain sufficient. Oh, I'm answering disclaimer. I'm sorry, champs. So this one, we can say the qualified one. I said it's known as what? It's also known as uh you will see by minor, or let me say incomplete information. Incomplete information or minor issues. So uh whenever you read a scenario and they will tell you that there is incomplete information, wara wara wara, just know they are referring to the qualified audit report. So this one, it's a bad. So since I said this one, it's a clean one, you should know this one, it's a bad report. Right? Bad. Let me say this. Bad report. This one is a good report. This one is a very bad report. All right. So when we are talking about disclaimer or withheld, I mean that the auditor has found major errors, right? So when you see major errors in the scenario, just know this is what? This is disclaimer. You must be careful because disclaimer and qualified audit report, they are kind of confusing. They are tricky. So when you see serious problem with the financial statement, the auditor refused to sign off the financial statement and rather give no opinion in order to distance themselves from the financial statement. They say, no, I'm not going to say anything here, because they are afraid now. So they will insist to sign off. So you should know when we are talking about the disclaimer, meaning that the auditor cannot express an opinion. When you see cannot express an opinion, cannot express an opinion, just know it's a very bad one. So this is what disclaimer. So I think now, what is the evidence and how it is collected? So you should know that audit evidence can be obtained by, we have many ways to obtain audit evidence. Ways to obtain audit evidence. One, inspection. By inspecting. So, Prof, what do you mean by inspection? Examining source document, fixed assets, right? Examining source document, fixed assets, register, bank statement, leases, So another one, it's observation. Observation. What do I mean? Watching processes that occur within the organization, e.g., observing how stock taking is done, observing the receiving or dispatch of stock, taking cash from the business premises to the bank. So you can also say interviews. These are the things that they will ask you guys. These are type of exam questions with employees or management, right? So we have the fourth one. So when I say interviews, ask question to gather information. Pre-processing of transaction. Reprocessing, to recheck the transaction that they are recorded accurately now of transactions. So is there any question? Is there any question? I'm talking to you guys. Are you satisfied?
Yes.
Then may I please ask?
Okay, ask me.
I said, do they ask this type of information where we have to give out the internal control, or
Yes, they
where
do.
they give you the
They do.
scenario and okay,
do.
so
They do. So what I will do, I will send you the internal controls, ne? Then you will write those notes down. So thank you guys. This is the end of the session. As I always say, accounting has enough marks for everyone to pass. Aim for the moon. If you don't reach the moon, you'll fall higher in B Maxwell and accounting group. So have a great night. I will send everything that we did. Hopefully tomorrow, that's where I will upload the recorded session on my YouTube channel. So have a great night. Don't forget to pray. Sharp, sharp.
Only.
Go and rate the tutor in the group. If you give me 1/10, it will assist me to improve myself. 2/10, 100/10, it's up to you. I would appreciate that if you do that. Thanks a lot, Sharp, sharp.